What's going on today, YouTube? Today, I want to show you guys, since yesterday, I talked about value investing and speculative investing. Today, I'm going to show you what I do for my value investing, why I do it, and why I think it's a good idea for everyone to do a little bit. So first off, this is VTI. Now, for everyone who doesn't know, VTI is an index fund. It's the Vanguard Total Index Fund, right here. That's its ticker symbol is VTI. Now, if you read, the investment seeks to track the performance and benchmark of indexes and measures the investment return of the overall stock market. The funds employs an indexing investment approach designed to track the performance of the total market index, which represents approximately 100% of the U.S. stock market, includes large, mid, small, and micro cap stocks, regular traded on the New York Stock Exchange and the NASDAQ. Now, the whole reason why I like this, look at its top 5 equities that are held. It includes Apple, Microsoft, Amazon, Facebook, and Johnson & Johnson. Now, these 4 companies, are huge in technology. Johnson & Johnson's another very famous company, but technology-wise, that's what's booming right now. You guys know. You guys probably all have Macs or iPhones. Apple's not going anywhere for a long time. Microsoft, it's been around for a long time. So, this is getting to the point where Microsoft needs to make sure they keep up with Apple. But, at the same time, I don't think they're going anywhere soon. Amazon, everyone knows Amazon. Everyone thinks shopping and everything's going to be online forever. That includes food and everything. Facebook, everyone in the world has a Facebook, and it's slowly becoming or not even slowly, it's quickly becoming the biggest marketing place in the world. And now, okay, so value investing mindset. I got in this back in March. It includes all 5 of these are the top 5 holdings. Now, instead of me just solely investing in Apple, investing in Microsoft, investing in Amazon, I own a little portion of all of these. So that's being diversified. That's helping me in the long run. And these index funds, they'll actively trade stocks based on whatever they think's good or bad. So they're doing this for me. I don't need to actively trade. I can just sit on the sidelines and they can take care of that for me. And in a way, this is all mutual funds do. All the people that you guys pay extreme fees for, that's all they really do is actively trade these stocks. So if you're in an index fund, they do it for you. It doesn't cost you a fee, and this even pays dividends. Now, I'm going to show you guys. Okay, we'll go to, just for proof, because I know everyone thinks you can make this up. Now, I invested $1,200 when I started this. I know that's a lot of money to some people, but hey, I saved up over time, finally decided to get in. So back in March of 2017, I bought 10 shares. Now you can see my total gain and loss, $223. And guys, that's for me doing absolutely nothing. I bought this stock at $121, right around there, and it's gave me $223 for me not doing a thing, buying the stock and holding it. Now, I'm going to show you guys the point of these. Now, okay, I said I bought it back in March. It was falling. Now, I'm a young investor too, like all you guys that I'm trying to get on this channel. And honestly, I'm going to say at first, yes, I was scared. I was scared to go in because I was thinking way back when the stock market was already way overextended. And so I'm like, hey, give it a shot. So I put it in and it's done nothing but rise. Yes, you'll have up and down fluctuations. You can even look on a candlestick if you like looking at candlesticks better. But yeah, see, it has, this is a day. These are all day candles. It has up and down days. I don't even think I bought it Pretty sure when I first bought it, it was at 121. So the first day I was in, I was panicking. I bought it, I bought it on this big dip, and I think I bought the next day, right here at 120 something. I think I actually got it at 121, and 3 days, 3 days after I went in, of course, what's it do? It falls and falls and falls, and that's honestly the first stock I ever owned. So I was freaking out. I was like, oh my god, why did I do this? I'm just losing money. But I was like, hey, you know what? I heard just hold, just hold, just hold. And since it represents like the Nasdaq and S&P, that's what this index fund tries to do. I was like, I'll just hold, see what happens, try it out. Hey, it's better than money's hitting the bank, right? Maybe. Well, yeah, you never know. You could lose. But so I held, and I just want to show you guys. Like, I know the stock market's on an absolute tear right now, but it's just gone up. And if I was smart, well, no, I'm not gonna say if I was smart, but now I see why everyone says set an amount you're gonna invest each month and keep on doing it the same day, no matter what this price is. This is whether it's up or whether it's down. So from now on, I'm going to set aside that portion and at least buy a couple shares of this stock every month. Because look, I missed out on all that potential. This really stayed low the whole way 2017, the whole way till like August. Like it really didn't change that much. But look, from September on, it killed it. And I missed out on all those gains because I haven't been investing in it continually. I just want to show you guys like that's the point of these index funds. You're diversified, and no matter if like one stock alone goes up or down, their whole goal is to make like they're an index fund. Their whole goal is to go up, keep on actively trading their stocks inside that you don't have to pay commissions for to increase their value. So from now on, another reason. So let's go a longer time range. Let's go 20 years. 20 years, week. Now these are week. These are week candles now. Week long, every week. Every red or green candle is a week. But look at this, guys. I mean, yes, they have up and downs. But say I was doing this this is the crash, 2007, 2008. That's a stock market crash. Say you were one of those ones that have been following this. I was too young back in these days. I didn't know anything about investing. I'm just learning now. Learned a lot in the past year, and I want to help you guys. But okay, this was the other crash, 2001, 2002. But say you start in 2002, and you kept on investing every month, every month, every month, every month, every month. You would have gone the whole way up, and then it starts to crash. The most important thing here is to stay in, especially if you're young and you're not planning on retiring anytime soon. And even, remember guys, this is all money you can afford to lose. But my point is, when this falls, this entire year, look how cheap this was. About probably around $30. We'll look, yeah, around 30, mid 30s. You could have bought so much of this stock back then. $30, and look, the cheaper it is, the more you can buy. That's like stuff on sale. Like when all you guys go to the store and you're like, oh my god, my favorite pair of shoes are on sale. This is on sale. And like that's why Warren Buffett says you want to do the opposite of what people do. When this was falling, people were freaking out, pulling out their money. But the smart, good investors, they were just buying, they were putting in the same dollar amount, but they got more of that stock. And look, from here to here, everything you were buying down here, you've pretty much tripled, quadrupled your money from 2009. How like that should blow your guys' mind. Like that's why you have to stay in when it drops. Stay in when it drops, ride it out. Especially if you're young. The younger you are, the longer you have to ride it out. Stay in, keep buying, but you're buying more, and then your portfolio, it's gonna like over time, the stock market has done nothing but go up. as long as you can outlast these couple years and you're not planning on pulling out your money anytime soon, you're gonna be better off in the future. So that was my main point of this video. I wanted to show you guys the potential and show you why it's not scary to get into something as long as you're willing to, like, don't even look at the price. Just buy as much as you can. Say you put aside $200 every month. Buy as much as you can that month, and then if it drops, you get more. If it goes up, you get less. But hey, overall, you're going to be better off in the long run. So remember, the one thing I want to stress, the whole reason why I don't care if this rises or falls is because it's an index fund. It's already diversified. If this was a single stock and it's falling, like say the company's going bankrupt, that's completely different. Index funds, they diversify you, so that's why I stay in. It's replicating the whole market, not one stock. If you're into one stock and it's falling that much, that might not be good. But this, stay the course because it's replicating the entire stock market. I just want to stress that. That's why. I wouldn't recommend being in one stock individually, seeing it fall this much, and just hoping it's going to go back up, because that doesn't happen a lot of the time. That's all for this video. Hope you liked it. Hope this kind of may have showed you guys like how you can live out the falls. Live out the falls. But like, subscribe, comment, check out my Twitter, Instagram. I just made those. And I'm ready to keep going.